I can't blame, these realtor investors for having a heyday.
Yeah.
I mean, if you see an opportunity to cause a short squeeze, of course you're going to take it. And you're telling me these genius, billionaires managing all this money didn't realize fundamentally what they were doing was eventually going to blow up in their face. They had the profits, they should have taken it. I believe they just got way too greedy. Pigs get fat, hogs get slaughtered. It's a perfect example.
Warren Buffett knows what he's talking about.
Don't you mean Warren Buffett?
All right, cool. We have Connor Harrison on the podcast today. Came across Connor's stuff on Twitter. We connected a little while back and kind of got around to just chatting for a little while today. We're going to talk about, how he got involved in investing and then just kind of talk about anything else that comes up. So thanks for joining, Connor.
Yeah, no, thanks for having me. It's really exciting to be here. Uh, how do you want me to start it out? What would you like to know?
Yeah, let's just kind of go with, a little introduction about your backstory and then kind of what led you to getting involved with investing and maybe a little bit of that initial journey there.
All right. Um, so I'm from the Midwest region. I actually started trading recently in last March, so right after the COVID crash. My very first stock purchase I ever made was American Airlines, which I missed out on a lot of growth because, being young and being a bit naive, I was like, okay, when I looked at the chart, we're seeing American Airlines at like 30, before the COVID crash. And then in my mind, it's like, oh, this is going for $10. It'll be 30 in no time. And it just sort of lagged behind the market. So that was really one of my first experiences trading. And what really got me into the mindset of investment and trading was it's a powerful like wealth creation tool. The stock market is available to everybody. It's insane. And when I saw that there was a potential to get in at these extreme lows, I took the risk and I put my money to work. And that's something that not a lot of people do. So I had started there. I did it over the summer while working a job. I then started getting a bit of exposure to options trading through Robinhood because there's the whole Robinhood frenzy. There was a massive influx of people, a lot of kids my age starting to trade there, and it was very easy to get access to options. I had zero idea what I was doing. I didn't know the Greeks. I didn't know how massively over leveraged you could be in some positions. Thankfully, I didn't trade on margin. That's a big thing because a lot of people saw that, oh, I can just get money from my broker and then I can, YOLO it into Tesla weekly call options. But I started options there and I've managed to stick through it. It's been a crazy ride. I mean, in the last year, you've seen people, quadruple their accounts in a week, and you've also seen people lose their entire life savings in a week as well. And it's definitely been a really crazy market since then.
Yeah, I want to, this should be kind of fun. So how old are you just for people listening?
19 years old.
And
That's how old I am.
in college, right?
Yes, sir.
Okay,
Sophomore in
cool.
college.
Okay, very cool. So I think this will be fun to talk about because, like you mentioned, the big topic that everyone's been kind of talking about, and even places on CNBC and things like that, is this huge influx of new traders and new investors, and especially with the ease of access like Robinhood, it's just never been easier to kind of get started. So if you could take us back to when everything started going downhill last year, do you remember, like, were you interested in investing before that? Were guys around you just starting to talk about it? What was the buzz that kind of got you to initially get going?
I think what originally got me inspired to start investing was my grandfather actually would give the grandkids a bit of money when they graduated college to then investment to help pay college, pay for that after. And I sort of realized that I could like have an ease of access on my phone because he did his through a broker and he had an account for us through that. And, I'd have to call him and I'd have to tell him, oh, I'd like to buy, this or that. And then at one point I sat down, I was like, wait a minute. I was like, there's an ease of access here. There's a mobile app called Robinhood. I saw one commercial on YouTube and I was like, wait a minute. I was like, I can just do this from my phone. And so I got some exposure there. And my friend was also telling me about it. He was like, oh, have you seen like all these market indexes, because I really didn't have that much of a clue what exactly, the stock market was, or what these indexes were, like SPY and the Dow Jones. And I was like, okay, this seems like a great time to start, with these massive lows. And I started there, and I was on Discord a lot. And that's where you see a lot of stock trading groups and things there. And I was watching some YouTube videos just about like Warren Buffett and stuff like that, because I've heard the name. And I saw an ad for, I believe it was Index Trading, which is a stock trading group you won't be able to find anymore, because there were some issues there
That's
with the
never good.
owners. Yeah. And so I really got exposure into options there, because they give live call outs, you get monthly subscriptions there, and there was thousands of people in there, and it was so much chatter, and there's people throwing in charts and all this technical analysis. And as I said, I didn't know what was going on. I just saw that, oh, this guy told me to buy this, in this call out, and he flips it for 50% profit. So I'd buy what he'd buy, I'd make a nice profit. Other times, I would see a bit of red and I'd sell too early, or I'd sell too soon, and things like that. And so eventually, after a while, when that stock group ended up splitting, I managed to get into a different group, which is currently called Next Gen Trading. It was Goons Trading originally, because we're the young guns of investing. We're a bunch of goons, and I'm currently a moderator there. And that's kind of when I started looking into learning technical analysis, learning some fundamental analysis, and really digging into what it takes to get a solid stock trade. And trying to learn, sector rotation, things like that. So I've been helping running that for almost a year, and that's definitely kept me on my toes. But that's kind of how it started to where I am now.
Gotcha. So when all this craziness was happening, people are chattering about it. You finally make the decision to open a Robinhood account. I mean, it's only been a year, right? So what have you done? What's been like your main source of knowledge? Where do you go to kind of learn new things and try and continue to progress?
I think that my main source of knowledge is, or has been, failure. Like it's gonna, you're gonna have some losses along the way where you learn, something that you wouldn't learn down the line. I told myself that when I bought my first few like call options on my own, started making my own call outs, I would get massive returns, but then I wouldn't sell. And then I had all this unrealized gain. And then the next day it would just drop. It would be back down to like -20, because I wouldn't secure profits, and I wouldn't get, I would get a bit greedy thinking I could, get a bit more out there. So that's really what has taught me my own trading plan and trying to learn there. YouTube was a really big inspiration there, learning advanced spreads like the iron condor, put credit spreads, call debit spreads, things like that. Kamikaze Cash on YouTube, and just all sorts of other random traders there. Learning supply and demand was really crucial. So YouTube was definitely that extra, I guess, step I needed to improve my trading. And there's so much information on there, and there's just so much you can learn for free.
I agree. How would you characterize your style right now? What are you consistently doing right now? And how has
Uh,
that maybe changed over time?
Originally, in sort of the start of the absolutely massive bull run we've seen, I was a lot more aggressive. I was buying more closer expiration contracts to get higher deltas on my options. I was just being a lot more aggressive on tech. Uh, I got in things like Plug and Fuel Cell. Those were some great micro caps, which are now small cap stocks that I got into. So just being really aggressive and finding things that I knew were going to be the future of our economy there. And now that we're seeing sort of a small rotation out of tech, I've become a lot more defensive. I've been running a lot of put credit spreads, and those are a bit more out of the money. So instead of buying options, I'm basically selling one instead, which is extremely profitable. It's crazy because there's always going to be someone buying an option, but you need someone to sell that option first. So you're collecting these fat premiums on these insanely volatile and high IV stocks, and and you basically don't have to worry about theta decay, which is when the value of your option gets ate away slowly. You have theta working for you, which is extremely game changing. And so I've switched to more theta positive spreads and things like that recently. I have some exposure to some leaps, which are longer term call options on things like American Airlines, British Petroleum. So a lot more fundamental institution stocks there.
And what's obviously the leaps are a year plus out, but for these other guys, what's your typical time horizon that you're looking at when you open them up?
For my put credit spreads, I tend to look for monthly because that's your more average return. You'll be more likely correct on the longer term movement than you will be the shorter term movement, because shorter term movements are a lot more volatile. But when you get that sort of month exposure, that month long exposure, and you see that it's going to be getting ready for a sort of bullish, run, you're going to be more correct there in the longer term time frame than you will the short. And then for leaps, I really, I really try to pay attention to things that I know we're gonna see as we reopen. Uh, Currently, I'm gonna start looking into some other stuff later, but I knew airlines are extremely important, and I know people are gonna want to travel. They're gonna want to get out of their houses. They're gonna want to do things. They're gonna want to see the world, and that's another COVID relief play there. As we slowly move out of that, thanks to vaccines and such. So for my leaps, I try to find longer term movements similar to my put credit spreads.
So you're really just kind of playing what you feel like at the time is going to be the most advantageous to you, right? It's not like you're strictly doing iron condors or strictly doing leaps. It's kind
Yeah,
of just based off of your sentiment with the market and kind of how you see everything changing.
yeah, absolutely. I do a lot of technical analysis after each trading day. I try to find the next setup. So I had an iron butterfly on Starbucks that I finally sold for a 25% profit. It was at max loss for a bit, but I knew that we were going to see some nice pullback because Fridays are for profit takers. So I managed to secure that, collect some nice premiums. And then I just opened up an iron condor on Merck there. It's pretty wide because it's been trading in just that same range for the past 3 months. And then I recently opened up some put credit spreads on things like Pepsi, some bank stocks, because, we're going to see it's another reopening play. So, yeah, I try to keep versatile because once you find something that works for you, so my defensive kind of play style has been working. You just need to keep playing that until it doesn't work anymore. Then you start to adapt to something else. Because right now we're kind of seeing a day traders market because it's all these extremes, ups and downs. And I think eventually, once we start to settle down again, we'll start seeing those longer term bulls and some bears being correct. So just being able to adapt and change your style when it's needed is extremely important. Know when you're wrong, even about something. I remember like 3 months ago, I was telling people I will not invest in ExxonMobil. I don't believe in the future of oil and gas stocks. I didn't I personally didn't see the importance of them, but once we started to reopen again and we're seeing gas prices start to steadily rise, demand gets much higher. I was like, I'm going to miss out on an extremely like solid trade there. So I admitted I was wrong. I swallowed my pride and I've been invested in that. It's done really well. So being able to adapt and admit when you're wrong and change your style is what really should work for you.
Yeah, absolutely. Again, it's like I feel like I need to reiterate that you're so well versed talking about this stuff, and it's been probably like less than a year you've been doing it. So I'm guessing you really kind of dove in once you realized this was something that you were passionate about.
Yeah, originally, my major was health science. I was pre-med. I thought I wanted to be a doctor. I wanted to do family practice, but once COVID happened and I started, trading and started investing, I was like, this is really powerful stuff. Like, this isn't something everyone knows about. So, my plan now is to be either a financial advisor or an investment banker, but I really want to be a financial advisor. Um, I want to work with a lot of younger people my age, helping with debt management and things like that, because they don't really tell you how to manage your debt or how to actually create wealth with your money in school. They'll teach you how to balance a checkbook, but they won't tell you, things like a traditional IRA, like a Roth IRA and things like that. So, yeah, I've been taking a really big deep dive. I've watched a lot of documentaries. I've read a few books. I've read The Intelligent Investor. I have it sitting up here on my bookshelf. That was extremely important in changing my longer term mindset. Um, Watching a lot of Warren Buffett documentaries and watching just some of his investors' days there has really helped. And I want to help give this knowledge or help people learn how to put their money to work for them, because there's so many different ways to do it, but they won't teach you that.
Yeah, it's funny that COVID, causing you to get involved in investing is what caused you to shift from more of a healthcare mindset to business and investing mindset.
Hmm.
But yeah, that was going to be my next question. I was going to ask kind of what you're majoring in, because so often people either don't get into this until well after college, when they should really be interested, or they just never do. But sounds like you probably caught it at the right time, considering you're a sophomore now, right? Probably gave you enough time to switch without any too many major kind of factors building
Yeah.
up on you.
Yeah. I'm now currently business administration with a focus on finance, and I'm actually minoring in economics. And economics is a bit tricky, I will admit. Accounting's probably my favorite class though, because that's pretty straightforward.
I think that was my least favorite class.
Oh, it's not that bad.
I think I don't really remember much about it, if we're being honest. I just remember not liking the class very much.
Yeah, I thankfully switched in time to where I only have to take a few summer classes and then I'll be back on schedule there. Uh, my fraternity has definitely helped me in the sense of getting some exposure to the business world. I've been talking to some alumni. There's some alumni that work at Edward Jones. There's a lot of financial advisors that work in rural places through there. I've talked to them, asked them, kind of how they got started, what internship did they take, things like that. And so I've been using my resources to kind of catch up to everybody else.
Yeah, I like it. I want to talk about, because this was your first year of being really involved. Ever since the major crash, like people have talked about, it's been an amazing year for investors, right? Doesn't mean
Absolutely.
we haven't had dips along the way, but do you ever feel like, or maybe in these past few weeks where we've seen some drawbacks that, have been a little bit uncharacteristic in the past 6 months, have you ever felt like, hey, maybe I've I don't want to say I'm overly confident because it's been such a strong bull market, but do you ever kind of have those thoughts like, hey, I need to be prepared for this to go south?
Yeah, absolutely. One thing I tell everybody in my stock trading group is always hedge your bull positions. Because even if you do lose money on your bearish positions, then your portfolio should be able to, outweigh that very small loss from your hedge. So I think currently what we're seeing is we're seeing a small like rotation out of tech and growth, because that's normally the norm when interest rates are extremely low. And there's a lot of, new investors, a lot of extra, equity being bought here in the markets. And so people are buying tech, people are buying these heavy growth stocks while they can, while the money supply is there. And then once we start to see these interest rates rise, we'll see money start to pull out of these growth and tech stocks and back into more, solid blue chip dividend paying stocks, more value plays there. And when we did see a lot of pullback from SPY and Triple Q, was mainly because a lot of these growth and tech stocks managed to sneak their way into the S&P 500, right? And so now that we're extremely tech heavy, once it starts seeing red, of course, everything else is going to go down, but you still saw all your airlines and your oil and gas stocks were still green while everything else was blood red. And so I think now that tech has sort of found a base here with another stimulus package coming out, um, what I'm expecting to see is now that valuations have sort of caught up to the rest of the market, we're starting to go back on pre-COVID highs for most value stocks. We're going to see tech also have a nice little rebound here. And I do think that we're going to begin another rally here soon, but no one can time the market. No one knows what it's going to do. So I try to not be too confident, but you also have to, be extremely confident in your plays, because if you're not confident in a play, why would you take it?
Yeah, for sure. I think what we've seen the past 2 weeks has been really healthy and definitely needed in a way. I mean, I don't know. You see so many people online just screaming from the rooftops every time that there's any red in the market, and it's just like, this isn't the way it is normally is. Like this has been an anomaly this past year, and it's very hard not to get used to the number that you're seeing on your account, continue to go up, and when you see it pull back 10-15%, it can feel like the end of the world, but in reality, something like this could prevent a more drastic drawback 3 months from now. So it's just kind of part of the life cycle that I think is healthy overall for the market.
Hmm. Yeah, I would love to see S&P 500 touch 400, even rally past that. I mean, it's entirely possible, but I also wouldn't mind if, oh, excuse me, if we touch 400 and then we see it drop back down to like that 340, 320 range, because then that gives a lot of investors amazing buying opportunities. Long-term investors are always going to be having a heyday on these market pullbacks. I mean, you got to be greedy when people are fearful. As Warren Buffett says, it's just some of the basics there. So I think it's important to have some cash on hand, maybe 20, 25% of your portfolio, if you really want to be aggressive on some of these dips, as I think we'll see some red here within the next 6 months.
Yeah, and I think something that scares a lot of people away is they always hear buy the dip, um, but people wonder how much does it need to dip before I buy? Because I'm not going to buy just because it's down 2%. So I don't know that I've ever shared this, but for example, my strategy that I'll typically use is like you said, I always have dry powder, so I always have a cash position of some sort, and then if we start to enter a drawdown like we saw these past 2 weeks. I will kind of use the indexes as my benchmark and kind of basically be like, all right, if the NASDAQ is down 15%, I'm going to put X amount of money into each of these positions, assuming that they are following the overall market trend to a degree. If we drop down to 30%, more money, 45%, all right, things are really bad. We're throwing everything else that we have
Yep.
left into the market. And by me already having that prescribed, it's like it takes the guesswork out of it for me. So I think the NASDAQ dropped to like 9% from its all-time highs, maybe 10%. So ultimately, I didn't end up deploying a ton of cash, but I also now feel like, you know what, if we are recovering, then great, we'll be back where we were a month ago. But if we drop more, then I still have that money available to me. So, is there anything you kind of do on a similar basis for your long-term positions?
For a lot of my longer term positions, since I already have a really solid base, I don't mind buying these smaller pullbacks, but if I am like really concerned about a stock dropping like 40% within like the next 4 months, then I look at the technicals there. Because if you look in the weeklies, you can find some solid demand zones, some solid supply zones, and you can see what a lot of market makers are looking for. So if I really am worried about like a growth or tech stock in my portfolio, I look at the technicals there and I try and find a solid demand where we're right below a massive green candle, because a lot of these tech stocks have just seen these massive green weekly candles. So I start to average in there. I could buy like a 10% dip, I could buy a 20% dip, and you start to slowly put that in there. But I never sell a position I want to keep if it does start dipping, because I'm not going to panic sell a long-term investment, because really, if you think about it, in the next 5 years, next 4 years, whatever, it's not going to matter. And like the trend stays the same. We'll see rally, there may be some sort of crisis, then we just rally past that within the next like 10 years. We could see the same thing now, but ours was just a bit more aggressive. So we could see another strong dip there, and then I'd love to buy it and then just keep holding. Um, I say never be afraid to average down on your investment, even if it's just like a 5% or a 10%. But I would do 5% dips on your slower movers, and then I'd wait for bigger drops on like your big growth stocks.
Yeah, I think it's also funny to see sentiment change so quickly. I mean, one thing I was talking about previously with another guy was, talking about Kathy Wood and ARK Invest, right? She was being touted this fall as the greatest investor since Warren Buffett. People are saying she's the Warren Buffett of our generation, which may be true. And then, after a year of, I don't even remember, like 200% return, the ETFs drop 20% in a few days, and now all the bears are coming out of the woods, and they're like, this is like asinine. Like the company she's investing in is ridiculous, and they have liquidity issues within their ETFs. And I'm like zoom out. It's like,
Yeah.
yeah, it's dropped 20% in a week, but zoom out and it's outperformed every other asset class, like maybe with the exception of Bitcoin or other cryptocurrencies. So it doesn't take much for people to quickly kind of change their sentiment and automatically be kind of looking at the negative side of things.
Yeah. I remember seeing that exact same stuff. Everyone on Twitter, like, oh, this is a scam. She's a sham. She's not a great investor. I'm like, oh my gosh. I was like, I just remember last week, people were like, oh, keep buying the dip. This is a great investment. I think people are too worried about the short term. Everyone's in a short term mindset. Everyone wants to get rich quick. And that's kind of a scary thing for me to see in the markets, is that we're almost treating it like, oh, I can, quadruple my account in like a month or a week. It's possible, but you're also taking an extremely risky form of investing, because she is being very risky. She's very tech heavy, and it's healthy. It's healthy what's happening, to her ETFs. It's healthy what's happening to tech. You know, 200% is a lot in a year. And I mean, it's possible it can go, 1,000%. One of my stock trading group's favorite investment is Microvision, which is, they do LiDAR technology there. And it was at less than $1 around March and April of last year. And then it touched about 28, I believe. And
Wow.
then now it's at 17, and we're just eating those dips up. We've been in it since last summer. We love this, we love the stock. It's a similar sentiment to GameStop and AMC, but just not as hectic. I mean, she does solid investments. They're great companies, but for some reason, once the tide turns, when the am I allowed to
You
swear
can
on
say
this?
whatever you want.
When the shit waves rise, all boats go with it. But I think that, as you said, people just need to zoom out and just take a breather. It's not that big of a deal. She's got some solid companies under her belt. I really like the outlook for a lot of them. And if you're really that worried about it, then don't invest in it.
Yeah, I agree.
No one's twisting your arm.
I think
You
people
know,
are just looking for headlines. I mean, the funny thing is, before any of this happened, I think it was like earlier this year. I can't remember if it was an interview or if she was just kind of talking under ARK Invest's YouTube channel or something, but she ultimately said, she's like, yeah, we are preparing for a major pullback this year. And she also said, the returns we've had have been crazy, and it's been expedited because of COVID and the innovation that's taken place because of that. But she said, and this is still a pretty lofty goal, but she said basically, we're looking for 20% return a year. So if that's their goal, and if they somehow end up this year at negative 20%, and then the next year is 100%, well, guess what? They're still averaging over 20% a year. So they've always said that they're basically investing for 5 to 10 years out. That's their time frame. But people, just like you said, is too short-sighted. They're not going to kind of do that research, and they're really just looking for something to say on Twitter or something to make a YouTube video about that's going to draw attention.
absolutely. Everything for views, everything for media. I mean, it's like what hedge funds do. They release these, short reports
Maybe not
about.
anymore, but
Yeah, well, if they're still around after what's recently happened, which, by the way, I still can't believe that they're blaming realtor investors for losing billions of dollars after they were massively over leveraged in a 200% short float on a company that you can argue is dying, but in an area, gaming and things like that, that's growing, like it's
yeah,
massive.
yeah,
And they had a lot of cash on hand. They had to change it once Ryan Cohen joined the board. That was extremely important. And then I believe they fired their CFO. I believe. They had some change of like executives there, which is also extremely important because I remember Intel, I believe it was during the winter, they actually they started to change some of their management, and the stock, jumped about 8% when they heard the news because, yeah, it's a boomer company. They needed some change. They needed some more younger guys on the board who wanted to be a bit more aggressive, who wanted to get out there, and actually like start taking up some market share. So I can't blame these realtor investors for having a heyday.
Yeah.
I mean, if you see an opportunity to cause a short squeeze, of course you're going to take it. And you're telling me these genius, billionaires managing all this money didn't realize fundamentally what they were doing was eventually going to blow up in their face. They had the profits, they should have taken it. I believe they just got way too greedy. Pigs get fat, hogs get slaughtered. It's a perfect example.
I agree. It was fun to sit back and watch, and I didn't partake in any of the trading with GameStop or AMC or any of those, but just to sit back and kind of see what probably happens behind the scenes to retail investors all the time without really having any idea of it on a much smaller scale, see happen to the hedge funds. I mean, the only people that are mad about that are the hedge funds and a lot of the
Exactly.
people on Wall Street. So it's pretty telling when you look at who thought it was funny and who thought it was kind of like revenge versus who thought it was unlawful.
Hmm. Yeah. Once I remember, as soon as like I remember GameStop being around $8, uh, almost 2 years ago, I believe it was, and now seeing it touching 230 something, I have no idea what it's worth today. I don't even check anymore. I just let them have their fun. But I didn't get involved in the GameStop thing, but I did buy AMC at $4 because I did like the investment. I slapped 400 in there just to kind of see how it would run because I knew we were going to start seeing more of a theme of short squeezes. And so I remember AMC jumped from $4 uh, that from the moment I bought it to 16, of pre-market the next day. And then I looked at my Robinhood because this was before I transferred out. And I was like, okay, like I'm gonna sell this. And it wouldn't let me sell. And I was
Because it was
like, oh
pre-market.
no, because they halted like any like
Uh,
trading of it. Remember when Robinhood
yeah.
halted trading for GameStop and AMC? And I was like, oh my gosh. I was like, this is gonna get really messy with like lawsuits and legal troubles. And now we're seeing Vladimir, whatever his name is, the CEO of Robinhood, is now having to go testify in court for all this. I mean, this is revolutionary. Like, this is game changing. We're seeing a massive shift of power here from the market being only for your hedge funds and people who already have money and these market makers to your realtor investors actually having real power in the markets.
Have you listened to any of Vlad's interviews post that whole thing going down?
I was going to watch the one he did with Dave Portnoy, but I had some homework to do that night. Sadly, school comes first, but I know he's having to lie through his teeth.
It's hard to watch. I didn't watch the one with Dave Portnoy. I watched. I don't know if you're familiar with the All In podcast. It's with Chamath Palihapitiya and David Sachs and a few other of these venture capitalists. But Vlad was on that one, and I don't know if it's just his persona or what, but he just does not come off as a very truthful guy. And he's kind of flip flopping on the reasons for why they had to do what they had to do, but at the end of the day, what happened was messed up, and the whole idea of Robinhood being, for the common trader and kind of giving the middle finger to Wall Street, it's kind of hard to back yourself up on that after restricting trading for certain people.
Yeah. The fact that you couldn't buy, but you could sell, like you could sell your position, said enough for me. I was like, all right. I was like, I don't want to be in this platform anymore. I was like, this is ridiculous. And I'm glad we're seeing a lot of people leave there. But when he was in the court hearing with Maxine Waters, I mean, he wasn't really answering any question as you
Yeah.
normally do, like with any lawsuit. You never really answer the questions. You leave it to your lawyer to do it. And I just can't support him. I don't like what happened, and I don't think he has a solid case to actually defend himself.
Yeah, I don't know. we'll have to see what happens with that, because the sad truth is a lot of apps and brokerages have tried to emulate what Robinhood does, but nobody has been able to replicate the user interface and just the ease of use. And I know they've actually been accused of,
Yeah.
gamification of finances, which is a whole nother topic. But I have not used Robinhood for any of my long-term investments in really maybe since like the first year I started investing. I still have an account with them just because the fact that there's no contract fees for options is a game changer.
Mhm.
And I'm kind of doing this thing right now where I put a certain amount in that account, and I'm just basically strictly doing credit and put spreads and call credit spreads over the next year, just kind of seeing how much I can build it up or potentially blow it up, just kind of as a little challenge. But um, yeah, man, it's like, I know Webull has come out. There's a few other ones, but what have you seen? I mean, nothing is as easy as Robinhood is. Yeah, they don't have all the tools, especially for technical analysis, but just in terms of your everyday investor or trader, nothing's easier than
Yeah.
swiping up and all the stuff that they have going on there.
I think Webull is really great for uh, people who want to trade. Investing wise, I'd recommend uh, Charles Schwab, Vanguard, your more boring apps because as like gamifying investing, like when you see like all these, green lines and red lines and all these, pretty colors, it does something to your mind there. And so having an interface that's very basic for your long-term investments helps definitely control your emotions. But I transferred from Robinhood to Webull, and that was a whole process. It took like a month, even though it's supposed to take like 2 weeks. And I know there's a lot of other people that also have started that transition, but Robinhood, I will give them credit for the zero commission on trading fees. That was revolutionary. I remember sitting down in my law class one day. My professor goes, he remember when he would have to pay like $70 just to, put up an investment. And I was like, oh my gosh. I was like, $70. I was like, that's 10% of like what I started with. I was like, that's absolutely insane,
Yeah.
and you could then just sell it for a loss.
Yeah, yeah. It's almost like for the long term stuff, you almost want it to be more difficult, right? That's why I think it's like you said, it's not smart to hold that stuff in Robinhood because it's so easy to sell out of things. And depending on how experienced you are or not, you open your phone, you see the borders all red and weird little emojis and stuff. It's just weird, and it could entice you to make poor decisions. But I mean, at the end of the day, it's capitalism, right? They
Yep.
built a product that obviously tons of people love, and the reality is you probably shouldn't be doing this stuff if you're not educated on it. But the other argument can be made that it's your own free will to make those mistakes. So I don't think personally, if I was without knowing all the facts, I don't think there's anything wrong with the user interface they set up. That's totally their right to do so. It's the people's choice to use it or not. But it just makes it so you should probably be a little bit more careful if you're not experienced kind of using that stuff.
Mhm. A lot of people who ask me, how do I start investing? How do I start like trading? I say, they're always like, oh, maybe I should open up a Robinhood. And I go, maybe not. I recommend Webull. I got my dad to switch over to Webull. He's been using Robinhood for a while too. And so I'm trying to like ease people more into that won't give you all these pretty colors because a lot of people are buying Robinhood on GameStop and AMC, and it's so easy just to click buy, and then they're like, oh, I'm down like 10%. And a lot of these other platforms, it's like, okay, I gotta click this, I gotta click this, and it's like along the way you're gonna think is like, do I really want to do this? Because I've caught myself a couple of times saying like, wait a minute, I was like, I'm going through like 3 steps to get here, and I'm like, do I actually want to make this like trade or this investment? And then most of the time, like I'll take a step back, I'll look at it again, and I'll realize, no, I don't want to do that. And so for a lot of newer investors, I always point them to things like Roth IRA or a traditional IRA. Like I try and say, here's the facts. And it's like, if you really want your money though, like now, like if you're going to have some aggressive, investments, do a taxable account just because it's so much easier to get out there. You don't have to pay a fine. And so I've been telling a lot of people recently to open up a Roth IRA because they're asking me all these questions, how do I start investing? And so I think pointing people to more safer stuff is a lot better. So I don't have to get a text, the next day saying, oh, this is down 2%. Should I sell? And I'll have to go, no.
Like you're going to keep texting me that every day when it moves a little bit. Um, yeah,
Oh gosh.
I
I
think it's,
remember
you can go ahead.
I remember my dad at like the very like start of the whole GameStop stuff. He was like, should I buy? And it was at like 2:30. And I was like, if you want, I I don't know. I was like, I'm not in it. I'm not going to tell you to buy it, because
Not
that's
to
not
mention,
how I
this is
trade.
like this is a once in a lifetime type. Like nobody can play this appropriately. It's like strictly a gamble at that point. So you can buy if you want to gamble your money, but yeah.
Yeah, I always in some of my classes I'll hear people talking about, I'll hear it like, for the back of the room they'll go, "Oh, did you like get into CCIV, after it had that massive pump?" It's like, "I bought it at like 30 and sold it at 50, tomorrow." I'm like, "Oh my gosh." I was like, some of these people are like doing really good. And then the next day they're like, "Oh, it's down like to $40 now." And I'm like, "Okay." I was like, "They didn't, secure the bag there." I was like, "I definitely would have." And then some people are like, "Oh, did you see what happened? AMC or GameStop?" It's like, I bought it at like 480, but it's gonna come back. I promise. And it's like, oh my gosh. I was like, what is going on?
That's kind of the
I
weird
had
thing.
to,
It's a weird thing about what's happened this past year is, it's gotten so many people involved in it that I don't know, for like guys like us that take it a little bit more seriously, it's like it's hard to kind of differentiate between people who and have no idea what they're talking about and are just gambling versus people who have a little bit of actual strategy behind it.
yeah, because my worry now is that like once people get exposure to this extremely volatile, 100% return by tomorrow, they're going to start expecting that that's the normal. And then they're going to be disappointed, or they lose like 80% of their position because they buy at the top. And
Yeah.
they're like, "Oh, well, I'm never doing this again." And so my worry is that we're growing this culture of, get rich quick. Like this is a means to get rich quick. It's possible, it's very hard, and it takes a lot of time, but a lot of these people don't have time. And so I'm just worried about what's going to happen here within the next year, where if people, are extremely exposed in like these heavy bullish positions, and then we do have some sort of major pullback and they lose 80% of their portfolio, withdraw it, and then never invest again, is that they're never going to want to start investing because they're just going to think it's a gamble.
Yeah, this year has been so out of the ordinary. I mean, if you were to tell somebody who started investing this year and they're trading things like CCIV that are going up and down 40+% a day, that on average we talk about an 8% or 8% return yearly. It's like, all right, you're going to put $1,000 in this thing, come back a year from now, it's going to be $1,080. That's a lot less exciting than what
Yeah.
we've seen this past year. But that's kind of the assumption when you're doing this stuff is you're trying to beat the market, which would put you up somewhere in the double digits, and that totally gets you away from that get rich quick kind of thinking. Not nearly as fun and exciting, but yeah, it's this year has just been crazy. So it's definitely introduced people probably in the wrong fashion for a lot of them.
Yeah. I think once we do see in the eventual future when it does happen, once we do see some healthy market pullback, even there could be another financial crisis, global crisis, things like that, we'll see some pullback there, and then we'll start having, the real conversation again. It's like, was I actually right about this? Was I too heavy in something else? Was I not exposed enough to like value plays? Was I too tech heavy? So hopefully we'll start seeing people realize that we need a bit of both.
Yeah.
You can have some speculative investments in your portfolio. That's great. That's how a lot of investment bankers do it. That's how hedge funds get like a 40% return each year. Things like that is it takes some speculative investment, but your whole portfolio shouldn't just be a speculative, investment or tech heavy or growth heavy. Or what you could do is you have a traditional or Roth IRA that's index funds, and then have a taxable account that is extremely aggressive.
Yeah.
I was like, if you're young, you should definitely take advantage of some of these more aggressive investments, but then you should start realizing that it's not always going to be this way. And so you should eventually start taking something safer that's a bit more guaranteed. Not saying it is guaranteed, but if the market does eventually implode on itself, we've got a much bigger problem.
Yeah.
The stock market's been around for almost 1,000 years. I mean, I don't see it going away in the near future.
Yep, I agree. Well, cool. What type of investing are you doing outside of stocks and trading? Anything in terms of cryptos or anything along those lines?
Ooh, that's a tough question. I personally do not do cryptocurrencies. I for
Nothing
me
wrong with that.
for me, I just don't like the future outlook of it. The new, I believe it's the head of the Treasury, Janet Yellen. She hates cryptocurrencies. She hates it. And nothing is stopping the government from, putting out a ban from it. India did it. It's very possible we could be next. I think if you can make a profit there, good for you. Um, I just don't think it's there. I know that the Federal Reserve was talking about getting some sort of cryptocurrency, like an American like
They're
currency
gonna,
that's a
yeah,
cryptocurrency,
digitalize the dollar basically.
which I was expecting eventually. It's like a sci-fi thing. It sounds cool. And it's possible we get that within the next 10 years, but it's also possible it doesn't come for like the next 100 years. I understand the idea of investing in crypto because, the dollar's losing, 2% a year on average. Well, yeah, that's expected. But if you put your dollar to work, you're getting a 10% or through 8%, and you're normally beating out inflation. But I can see the crypto space as being profitable for most. If you're profitable in crypto and you understand it and you think that the future aspect is there, it's a speculative investment, just like everything else is. Good for you. But as I said, I don't like the future outlook of it. Big brother, the government, they don't like things that becomes decentralized. And it's possible that banks even take control of cryptocurrencies because there's rumors of banks buying like Bitcoin and things like that. And it's possible. It's possible that banks just take control of that. And then to me, you lose sort of the whole like decentralized aspect of it. And that kind of ruins the whole growth prospect of it in my mind.
Yeah. I'm a big believer in Bitcoin, but I think the most important thing you said there is that the dollar is losing value and will continue to lose value at the rate that we're going into further and further debt. But the most important takeaway from what you said is just to get out of the dollar in some way, shape, or form, right? Whether that means buying equities like stocks, whether it be real estate, et cetera, et cetera. Still important to have some amount of cash, in case you do need that quick and ready cash. But yeah, I think in terms of like the government banning it, it could happen. There's nothing necessarily stopping that. I don't think that will stop people from using it. Could mean that the price is going to take a hit, but I guarantee people in India are still holding Bitcoin, and then every country that gets rid of it, like if the USA was to ban it completely, well, guess what? Russia would love that, right? Like a lot of these other superpowers would love that because that means that they can capitalize on it even further. So that would be my argument against that. But like you said, we just don't know. Unfortunately, I don't think Janet Yellen is too educated on cryptocurrency and Bitcoin. From a lot of the statements that she's made, it's just like factually incorrect, the stuff that she's saying. But again, unfortunately, that doesn't mean that she can't take drastic action. So yeah, I'm with you. It's definitely more of a speculation than anything else. But it'll be interesting to watch. I mean, it's hard to argue its performance so far. We just have to hope there's no regulation or any drastic step-ins by the government or anything.
Yeah, I'd say if you're kind of weary about it and you're not really sure, I'd recommend, in your taxable account, maybe throwing like 5 to 10% in it. Like if you're not too sure about it, but you still like some of the growth aspect there, I think that would be a decent position to take there. But one thing I don't like is going on Twitter and seeing people say, "Oh, this is a failing business because they don't have, Bitcoin on their balance sheet." A lot of people are like, "Oh, this is a stable, store of value." No, it's not. A stable store of value doesn't, move up and down like 5% every week.
Yeah, I don't like the store of value argument. Actually, there was a guy that tweeted the other day. He's like a CPA, I don't know, very traditional investment guy. and he says, Bitcoin's not a store of value. And I responded and I said, you're right. It's an acceleration of value because I mean, if it's 200% return every year, then yeah, it's not storing its value very well. It's actually giving you a 200% return every year. I kind of did it tongue in cheek. I understood what he meant by it, but I look at it more of like an investment than anything else. I tend to believe and care about what, a lot of people are like, you're like, what's your exit strategy for Bitcoin? And they'll say, well, getting out of the US dollar was my exit strategy. So they're just like only Bitcoin now. And to me, it's like, until it's proven to be more of a, exchanged currency and that we're getting away from the US dollar, I still care about how much my Bitcoin position is in US dollars because that's what's going to actually pay for things. So that might be contrary to what a lot of the hardcore Bitcoin bulls are kind of thinking. But I personally look at it a little bit more of as an investment than just strictly getting out of the dollar and into the new global reserve currency of the future or something.
Yeah. I think one crypto that I was considering slapping some money in was Ethereum, just because that's the basis of almost every crypto, if I'm correct. I'm not well versed in the crypto space, but I know that a lot of people use that blockchain technology through Ethereum, right?
Yeah, Ethereum's kind of the basis for a lot of the applications and things that people basically you can build on Ethereum, right? And Ethereum can be used for quicker exchanges and things like that. It's definitely separate of Bitcoin. They would actually not even consider them competitors. They would kind of consider them separate entities and
Mm-hmm.
fulfilling their own separate duty in a way. But
Yeah.
yeah, Ethereum's been crazy. I mean, even like with this whole NFT market, these non-fungible tokens everyone's talking about with the digital art and NBA Top Shot or whatever it's called, all those things, cyberpunks, all of that and the transactions that go down on there, I'm pretty sure the vast majority of them are done with Ethereum. So yeah, I'm not too technical on that stuff. I'm not like super, super tech savvy. So I kind of just try and understand the baseline and then stay in my lane from there.
Yeah, you're not one of the guys that has laser eyes on their on their Twitter portfolio.
I think I did put laser eyes on my little my little logo.
Yeah, but I would definitely consider throwing some money in Ethereum just because it's the basis of most cryptocurrencies there. And I think that's a bit safer. It's still a very aggressive growth investment. And I feel like I would rather put my money there in Bitcoin or something else. But the NFT market, I have no idea what's going on. That happened literally overnight. Like
Yeah.
I remember one day waking up and they're like, "Oh, I just sold my NFT for like 49 million." And instantly I go to my Discord and I'm like, "Can someone explain this to me? This makes no sense. Like what happened?" It's like that
Yeah.
I'm
There's this one artist, Beeple. Have you heard of him?
is that did he sell that piece for like 59 million or something?
He sold one yesterday for I think like $69.2 million.
Gosh.
And it's like a collage of all his story is actually really cool. He's been doing his art is crazy. I don't know if you've seen it, but it's all like super modern. It almost looks like special effects, like in a movie, right? I don't know, you'll just have to look it up to kind of get a feel for it. And it's all a lot of it's based around current events. But I think he's produced, and they're really, really high quality. And he's produced one of those pieces of art every day for something like 14 years. So he said it takes him like 2 hours, hasn't missed a day and didn't make money on it for a long time. I think he was just doing it as he was working his normal 9 to 5. And it's all kind of culminated. And now this NFT space is taken over. And it's like he's the Pablo Picasso of NFTs. Like his artwork has been going for tens of millions of dollars over the past few weeks. And the ironic part is, I think the guy that bought the $70 million piece yesterday is like a millionaire from cryptocurrency. I don't know if it was
Mhm.
Bitcoin or what, but it's all just meshing together. And I understand why some people, and me included, I'm like, I get it, but I don't really like, why would I spend money on this, And maybe I'm a boomer now, but I don't, I don't know, man. I get it, but at the same time, I don't get it.
It sounds like just another tax write-off, because people have been buying art physical art for millions of dollars just so they can write it off on their taxes. It sounds like the same thing, but digitally. And
Maybe.
in all honesty, if you can flip a profit, good for you. Like, that's great. Once again, I don't really understand it. But if that's your strategy and you're profitable in it, great. Keep it up. I love seeing people make money. I love people, changing their futures for the better. It's great. But to me, I'm gonna stick to what I know. I'm gonna stick to what's best. Maybe I'll go in Microsoft Paint and try and make something, sell it digitally.
I'll promote it, but I can't promise that I'll put any money into it.
Oh, I'm sure someone would buy it for like 1 million.
More power to you. Well, I got one question that I tend to ask everybody on here. If you had access to one mentor, dead or alive, could be anybody, 24/7, you could hit them up. Who would it be and why?
Ooh, I think this is going to be a very stereotypical answer. It would have to be either Warren Buffett or Charlie Munger because both of them are absolute geniuses in value investments. And I'm more of a value investor with a bit of growth on the side. And so I think getting into their mindset of finding things that have just these massive, economic moats and are extremely undervalued because I don't know if you've looked at Berkshire B or Berkshire A over the past year, but they've been providing some very solid returns. I mean, even when everything's, blood red, even when SPY was red, it was still green. It's amazing. And so to me, just finding out that mindset of how to find true value in your investments and finding something and building a portfolio that can keep carrying it up even in some of the bloodiest markets and finding times to where you need to take that risk just to buy something that others may not believe in.
Got it.
So stereotypical answer, but I think it's a pretty good one.
I actually haven't gotten that one a whole lot, but makes total sense to me. You can't go wrong with either of those guys. Well, Connor, thanks for doing this, man. Go ahead and any closing thoughts, and then shout out kind of where people can find you if they're interested.
You can find me on my Twitter. It's Finance Maverick. I'm sure you'll link it there. Check out if you're interested in stock options trading. You can come check out Next Gen Trading. I'll put the link to that on my Twitter. And one last bit of information, I guess, is as I tell everyone else, if you're trading options and you're in a lot of bullish positions, just make sure you hedge your positions.
I like it. All right, man. Thanks.
All right. Thank you.